The top business stories live from the Sky News City studio. Retail sales volumes fall to their lowest level since February 2021, when COVID lockdowns were still in place. Ikea announces plans to open its second high street store in the UK. And we'll hear from the governor of Lagos State, home to Africa's most populous city and one of the continent's fastest growing regional economies. Good afternoon, this is Business Live with me, Ian King. UK retail sales unexpectedly fell last month to their lowest level since February 2021, when widespread lockdown restrictions were still in place. It suggests consumers may be drawing in their horns ahead of the Christmas period. Well, the Office for National Statistics said that retail sales volumes fell by 0.3% on a month-on-month basis. That was much less than the 0.3 to 0.4% increase that had been expected and followed a revised decline of 1.1% in September. On a year-on-year basis, retail sales volumes were down 2.7%, worse than the 1.5% decline that had been expected. There were falls in sales volumes in both food and non-food, as well as in motor fuel. Online was the only sector to report higher sales volumes during the month. Meanwhile, Ikea, the world's biggest furniture retailer, has announced plans to open a second high street store. Its real estate arm, Ikea Centres, has bought the Churchill Square shopping centre in Brighton and plans to sell around 6,000 of its products at the site. The opening will be the first by Ikea outside the capital with this format, following the launch of its first high street offering in Hammersmith, West London, last year. Well, joining me now to talk about this is Sebastian Hulving. He's Global Expansion Director at Ikea Centres, which is Ikea's real estate arm. Sebastian, welcome to you. Why has the business gone down this high street format?
Thank you, Ian. Can you repeat your question again?
I was just wondering why the business has decided to adopt these high street formats.
We want to get closer to where the many live, of course, and that's the way. Urbanization is here to stay, and we need to be where the people are.
And have you tried this in other countries?
Yes, it's quite predominant in Asia, and we have a few stores in other markets as well. We are currently developing in Paris a second store there. So, but that's for Ikea retail, and I represent Ikea Centres, who is the real estate arm then of Ikea.
Indeed. Are you able to say how much sales per square foot differ in these formats compared with the traditional store formats?
I don't want to go into that, and I don't have that number in my head. But the customer habit is, of course, different when you have it just outside your doorstep. When you go to the larger Ikea store, it's more of a intent than when you pass by every day.
And with this location in Brighton in particular, why have you alighted on this one?
It's not only to come back to Brighton after ABBA's success in 1974. It's the obvious choice. It's the second most important city in the UK. And UK is a prioritized market for us. So it feels quite obvious as a choice. There's 382,000 households in the PMA and 1 million people. So I think we have a lot of people to serve in Brighton, and it's 1.2 hours drive to the nearest store in Croydon. So I think we can offer affordable home furnishing accessories in Churchill Square to the many in Brighton.
Right. Are you able to say what other locations you might be looking at just now?
We are scouting globally. So we are in North America, we are in UK, Europe, India, and China. So we are looking globally at opportunities.
So how many sites, if we look at the UK market in particular, might be appropriate for this format?
I can't say. Today, IKEA has 22 locations in UK. And there's a love for the brand, so I will let IKEA Retail answer that question. But there are huge opportunities for IKEA in most markets.
And does this have any potential repercussions for the traditional large store formats with which we associate IKEA?
I think it's a complement. All retail is in transformation, and you need to adapt and follow the customer. So, but the big stores are doing well, and it's seen as a complement to the smaller stores.
And tell me about Ikea Estates and how you're running the business just now. Obviously, certainly here in the UK, we've seen a big sell-off in commercial property stocks. A lot of them are trading at a big discount to their net asset value. Obviously, you don't have that problem as a private business, but I'd be interested to hear your reflections on that.
Just speaking for us, we have seen a good opportunity in the market to act, and we are very happy with the deal that we have struck. And we see that we can also with our closeness to operations and hands-on management of the asset, I think we can revitalize it and take it to the next step.
All right, Sebastian,
we're not looking at it from a day-to-day perspective. We're more long-term than that.
Very good. Sebastian, we have to leave it there, I'm afraid. Thanks for joining me this afternoon. Appreciate it.
Thank you.
Some other business news stories for you now. A nationwide building society said today that there are signs that cost of living pressures are starting to ease, although it warned that conditions for households were likely to remain challenging in the near term as the effects of previous interest rate rises feed through and labour market conditions soften. The UK's second largest mortgage lender was reporting an underlying pre-tax profit of £1.26 billion for the 6 months to the end of September. That was up 29% on the same period last year and largely reflected an increase in the spread between what Nationwide pays savers and charges borrowers. Nationwide also benefited from a reduction in charges for credit impairments from the same period last year. Shares of First Group jumped by as much as 4% earlier today after the bus and train operator unveiled a partnership with the Japanese industrial giant Hitachi as part of its bus fleet and infrastructure decarbonisation programme. Under the agreement, a joint venture set up by the pair will buy up to 1,000 electric bus batteries, valued at around £100 million. These batteries will then be leased by First Group to install on its electric bus fleet. First Group said the agreement would save it £20 million in its current financial year and lift its annual earnings by £3 million a year by 2026. The pub operator Marston's said today it had replaced its chief executive with immediate effect. Andrew Andrea had been chief executive since October 2021, since when the company's share price has fallen by 61%. His successor will be Justin Platt, who's currently chief strategy officer at Merlin Entertainments, the resorts giant behind Madame Tussauds, Alton Towers and Legoland. Well, Marston's, which operates some 1,400 pubs across England, Scotland and Wales, also said current trading was in line with market expectations. Now, anyone who attended the Lord Mayor's show here in the city last weekend will have spotted a brightly coloured float promoting Lagos. The Nigerian capital is seeking to position itself as Africa's cultural, entertainment and economic hub. And as the continent's most populous city, it's also poised for explosive economic growth. I've been speaking with Babajide Sanwo-Olu, who's the governor of Lagos State, and began by asking him what kind of growth he was expecting.
Right now, the population is well over 20 million, 22 or thereabout. We probably should be conducting another census later next year, maybe by second quarter, third quarter. But in terms of GDP, we've seen 2-3% GDP growth in the last 4 years. So it's about 130 billion now. So in terms of numbers, it makes it the fifth or so, the largest GDP growth in Africa. The GDP of Lagos is actually bigger than the GDP of Kenya, is bigger than Ghana, is bigger than Rwanda, is bigger than Senegal, right? So as a little subnational, it's actually very big in how it stands, in how it sits, and it's all of that conversation that we think a lot of people need to know what is happening in Lagos, and how we can use the Lagos story, to sort of like tell the African story, and be able to put it, into where it should really, really be.
You've just established the Lagos International Financial Council. What are you seeking to achieve with that?
So the whole idea, right, is for us to be able to let the world, starting with London, because we've got a lot of history, with the city of London, get them to know what is happening in Lagos. But the council will set up strategies where we can handhold companies. We can handhold British companies. We can handhold, investors, foreign direct investors that want to come into Lagos. Let's know what are the red tapes. What are the things that they want us to do? Regulatory framework, legal framework, what kind of permits they need to have, what kind of approvals they need to have. So the council will going to set up structures, where communication and collaboration will happen.
In seeking to attract international investment into Lagos, what are your priorities? Which are the sectors that you're most keen to expand?
The tech industry is very important. For the past 3-4 years, Lagos has remained the tech startup capital in Africa. So there's still a lot of depth that we need to bring into that space, right? The financial services, yes, there's a whole lot of, financial products that still needs to be deepened, in that sector. So we want, to see a lot more international financial organizations come into Lagos, right? We want, the creative industry to also have a play in our economy. Then, of course, general consumer products. Because of the population we have, we believe, anything indeed could have a market. You could have your own share of the market, petrochemicals, consumer products, any of those 3-4 areas will indeed do very, very well in Lagos.
It sounds so from what you're saying as though the economy is very, very services focused.
Pretty much. And reason being, we're just a little tiny space. We don't have that much arable land for farming or for agricultural products. But we can do very well because of the population in terms of services, technology, communication, IT, infrastructure, anything around that space.
One of the problems that Nigeria has had historically is holding on to its talent, stopping those people from going to work overseas. Is that still an issue for you? Are you finding it easier to retain talent?
Well, it's still an issue, but that's why we're here. That's why, I'm having this conversation, and we're trying to do the collaboration. And we're trying to say we can de-risk, some of those risks that comes with trying to, not secure the talent. So they can be back in Nigeria, in Lagos, whilst they're working, for international companies, and that's what technology does these days. Just over the weekend, the president was in Saudi Arabia, and the last 2 months he's been in India, he's been, to UAE, he's been in South Africa, he's been to Saudi Arabia. His vice president has been to China, they've been to Brazil. So we're all out there, just telling the real story of what is happening in our country, and me in my state. Now,
as things stand, the UK is the biggest foreign direct investor into Nigeria.
Yeah.
From what you're saying, it sounds as though that might not be the case for too much longer if you've got Saudi money, Chinese money coming in potentially.
That's why they shouldn't miss this opportunity, But you're right, the Saudis are coming, the Chinese are there already, the Americans are there already, the British are there, because historically, in the colony of Lagos, Nigeria and Britain have been for almost two centuries now. But we still cannot just leave the comfort zone. We cannot say, yes, we've been there for 30, 40 years. We still need to be creative. We need to innovate. We need to think out of the box. We need to be able to tell the stories differently because the world is actually becoming a lot more competitive.
Now, President Tinubu introduced a wide range of economic reforms shortly after he was elected. We're 6 months on from that now. Have they achieved what you would have hoped they would have done?
I believe 6 months is a short time, right? But in terms of a clear strategy and focus, it's there. What he's done, no president in Nigeria has been able to take that audacity, to sort of like remove the subsidy on petrol, on pump price. That in itself will save the country about $2.5 billion, right? So these are funds that can go into other areas in education, in health, in poverty reduction. But more importantly is what he brings to the table in terms of having been a governor in Lagos State before. That's one. Secondly, the fact that he's challenging his cabinet members, to say to them, if you don't sit up and do the right thing, I'm going to kick you out. He had said that to them 2-3 weeks ago, and he said to them that we've got a job to do. We have to do it well. So what we're asking our citizens is let's give him a bit more time. It's pretty tight up right now, but let's give him a bit more time. He's set up very bold, laudable agenda in his Renew Hope, right? I think another 6 months from now, we'll begin to see the relief, coming out from that, from all of his interventions. And I believe that the population will be better off for it.
And that was Babajide Sanwo-Olu, the governor of Lagos State. European stocks have completed solid weekly gains as we head into the weekend there. All of the major continental European indices finishing more than 0.75% higher amid growing optimism that interest rates have peaked around the world. Talking points this afternoon include Generali Italy's biggest insurer, shares of them down 1.5% in Rome after quarterly results in Milan, after quarterly results were weaker than expected. Well, here in London, the FTSE 100 has finished the week on a positive note as well, up 1.25%. That's notched up a good weekly gain for the FTSE. Well, the leading gainers this afternoon, China-exposed stocks have led the way. Both Standard Chartered and Prudential well and truly in the positive territory. Yes, you can see very up smartly, both of them. Well, NatWest is ahead by nearly 3.5%. That's on the back of some supportive broker comment. Outside the FTSE 100, very interesting move in Aston Martin Lagonda this afternoon. It's risen by some 6%, and that's after its biggest shareholder, Lawrence Stroll, who you'll recall was on the programme fairly recently, sold a minority stake in the Aston Martin F1 team to the US private equity firm Arctos Partners. Over on Wall Street, well, stocks have taken a bit of a breather following mixed signals from Federal Reserve officials on the state of the US economy. Gap is a major talking point this afternoon. It put its results out last night after the closing bell. They were much better than expected. The shares have surged by some 31% on the back of that. On the foreign exchange market, well, the main story really is one of dollar weakness. As you can see, the pound is up by 0.1% against the greenback. The euro's up by 0.25% against the greenback. The dollar in line for its biggest weekly drop since July. As for the oil price, well, that sold off last night to hit its lowest level since the 7th of July, but it's rallied today, partly, I suspect, because of the weak dollar. It tends to move in inverse proportion to the dollar. Barrel of Brent crude currently changing hands at $79.92 a barrel. That's up nearly 3.25% on the session, but it is on course for its fourth consecutive weekly decline. Well, still to come here on Business Live. Will the Chancellor raise alcohol duty again on Wednesday? I'll be hearing pleas for freeze from the Scotch Whisky Association. Don't go away.
That has happened within minutes, and now it's coming from both sides. And it's moving this way.
Only about half a mile from the Turkish coast, and it's evident that the boat seriously overcrowded. This is one of the most severe viruses in the world.
I'm Alex Crawford and I'm Sky's special correspondent based in Istanbul.
This is going to be the biggest party Tripoli has ever seen.
That's it, it got us then.
There's a lot of action going on, a lot of hits coming in still. We aim to be the best and the most trusted place in news.
Clearly not had very much to eat at all. A lot of them extremely thin and very frail. Look at her arms. I can put my entire hand round.
This is the cocktail of drugs which the doctors at this hospital have been giving their coronavirus patients.
Made for people who want clarity in an uncertain world.
Mother Nature can be vicious, absolutely savage.
The world's largest falls now down to a trickle in places.
I can't imagine how much plastic is lying at the bottom of this huge lake.
Oh! Close and personal with a rhino.
This is what makes the job so fantastic.
Five of us have made it out of the car.
Welcome to Backstage, the film and TV podcast. just took a shower above the clouds. You know why? Because this is the Emirates A380. Fly Emirates, fly better.
Welcome back. Now, with the autumn statement just days away, the Chancellor is not short of advice from businesses on measures to help boost growth. Well, one proposal likely to go down well with the broader public comes from the Scotch Whisky Association. The body, which represents 95% of the Scotch whisky industry, is calling for a freeze on alcohol duty, which last rose as recently as August. That was the largest alcohol tax hike for nearly 50 years and saw the duty on spirits and some beers rise by 10% and the duty on wine rise by 20%. But there are fears the Chancellor could raise duties again in line with the RPI measure of inflation, which would put them up by a further 8.9%. Well, joining me now is Mark Kent. He's the Chief Executive of the Scotch Whisky Association. Mark, welcome to you. The Chancellor wouldn't really raise alcohol duty for a second time in 6 months, would he?
Well, we certainly hope not, Ian. I mean, you've pointed out that we've just had a record-breaking 10.1%, which the Office of National Statistics has said has fueled inflation. So do that again, and you're going to get more inflation and less revenue for the government, because as we've seen over the past 10 years, freezing the duty actually leads to more revenue for the government.
The latest hike in August means that 75% of the bottle that you buy, that you pay for a price for whiskey, is tax. Is there any other product that's taxed as aggressively as this?
Well, spirits are taxed proportionally far more than any other drink. So if you and I, after this, go down the pub together, you have a pint of cider, I'll have a double whiskey, and I'll be paying 4 times as much in tax as you are, even though actually I'm drinking less alcohol.
So the latest hike in August, what did that do to UK sales?
Well, we're still seeing the effects, but what it has been shown is to be bringing in less money for the exchequer. And when you have a rise like this, there's less money for our industry to invest in the UK, and that has a knock-on effect on jobs. We invest a lot every time there's been a freeze. We've invested in hospitality, in tourism, and other business. So really, what we're saying is that we don't see there's can be anything good coming out of a tax rise next week.
The Scotch whisky industry is, of course, an enormous export earner to the UK. Just how important is the domestic UK market to the industry these days?
So we export about 90% of what we produce, and that means the UK is our 5th biggest market. So it's an important market still. And the other thing that's important when you're dealing with other countries is to set a good example. I used to be an ambassador. I used to go in and argue for UK exports, and I know that they look at what happens in our home market. So that's another reason why we're expecting the Chancellor to do the right thing and freeze duty.
Put this into an international context for me then, Mark. I mean, how much would a bottle of Scotch be taxed in a country like France or Germany or, of course, Japan or India?
So if you go into a bar in Paris, you'll be paying half as much tax as you would if we just nip around the corner here in Edinburgh. The UK tax system is the highest of the G7. We are taxed to the hilt already, as I said last time I was on here, just after we'd been hit for 10.1%.
It's hard to imagine that the French would tax red wine in the same way that the UK taxes Scotch whisky, isn't it?
Well, that's quite right. Yeah, I mean, Scotch is an iconic drink. The rest of the world appreciates it, and we hope that our government will appreciate it. You know, we're out there battling for Britain, exporting. We're the UK's biggest food and drink export, Scotland's biggest export. 70% of spirits altogether are produced in Scotland. So we need to have that support from the government back home.
Do you think you might be looked on a little different? I mean, Rishi Sunak, of course, famously is teetotal. Do you think that he sort of doesn't quite have the feel for your industry as a result of that?
Well, we invite a whole range of politicians to come and visit our distilleries, our site, so they can understand the challenges which we face, as well as the fantastic product which is being produced. I don't know the personal consumption habits of every person, every politician who visits us, but the maths should be clear, the economics should be clear about what this industry contributes to the UK economy.
OK, Mark, got to leave it there. Appreciate you joining me. Thank you.
Good to speak to you again, Ian.
That's it from me for this week. Back on Monday at 11:30. Hope very much to see you then. Simon Mosin's up next with the News Hour. Do stay tuned for that. Have a good weekend. Cheerio.